Good morning, and welcome to TOITOI Japan Market Radio for Friday, February 28, 2026. I'm your host coming to you from Tokyo with a daily briefing for global investors tracking Japan. Today we'll walk through the latest moves in Japanese equities, the yen, and rates, along with some key developments shaping investor sentiment. Joining me as always is our portfolio manager with a sharp focus on Japan. Let's start with the market summary. What's the setup today?
Thanks for having me. So right off the bat, there's not much to report on the price action itself because Japanese markets were closed today for a national holiday. That means no live trading in the Nikkei 225, TOPIX, or JGBs. However, plenty happened overnight and over the past 24 hours that will matter when Tokyo reopens on Monday. We saw continued volatility in US tech, fresh geopolitical risk out of the Middle East, and some notable institutional positioning in Japanese financials. All of these will set the tone for the week ahead.
Absolutely. And even with Tokyo closed, global investors still need to price in these overnight developments. Let's dive into the details. First up, we saw the Nasdaq resume its sell-off yesterday, and notably Nvidia fell despite posting strong earnings results. That's caught a lot of attention because it suggests the market isn't rewarding even solid fundamentals right now. Walk us through why this matters for Japan.
It's a really important signal. Nvidia reported numbers that were strong on the surface, but the stock declined anyway, and that tells you sentiment around growth equities remains fragile. For Japan, this matters on multiple levels. First, there's direct exposure through the semiconductor supply chain. Companies like Tokyo Electron, Sony, and Canon have significant revenue tied to US tech capital expenditure cycles and Nvidia's procurement decisions. If Nvidia's outlook softens or if US tech broadly pulls back on capex, that filters directly into Japanese exporters' order books. Second, this kind of risk-off move in the Nasdaq tends to hurt higher beta Japanese equities. Think small cap exporters and cyclicals. Defensives typically hold up better in this environment.
And what about the yen and Japanese government bonds? How should investors think about those in the context of this tech weakness?
Good question. When you see broad risk-off sentiment like this, the yen typically strengthens as a safe haven currency. So I'd expect downward pressure on USD, JPY when Tokyo reopens, especially if the Nasdaq weakness persists into next week. There's also the carry trade angle. A lot of speculative positioning has been funded in yen, and when volatility spikes, those trades can unwind quickly, which accelerates yen strength. On the rate side, flight to quality flows usually support JGBs, so I'd expect the 10-year yield to stay range-bound or drift lower. It's not a dramatic move, but it's consistent with defensive positioning.
That makes sense. So defensives in equities, yen strength, and stable to lower yields. Meanwhile, in corporate news, we had an interesting development involving JP Morgan Chase. The firm has purchased shares of Mitsubishi UFJ Financial Group, or MUFG, which is Japan's largest banking group by assets. This is a notable institutional move. What's your read on this?
I think this is a confidence signal, plain and simple. JP Morgan is one of the most sophisticated financial institutions in the world, and for them to add to a position in MUFG suggests they see value in the Japanese banking sector right now. MUFG has benefited from yen weakness over the past couple of years, and there's also growing speculation that the Bank of Japan may continue to normalize policy, which would be a tailwind for net interest margins at Japanese banks. So this move validates the thesis that Japanese financials are attractively valued relative to global peers. It also reflects continued foreign capital inflow into Japan, which is an important structural theme.
And how does this play out for the broader market? MUFG is a big index weight, right?
Exactly. MUFG represents around 4 to 5% of the Nikkei 225 and TOPIX. So any positive sentiment around the name can provide modest support to the indices. More broadly, this could reinvigorate interest in the Japanese banking sector as a whole. These stocks have been relatively unloved compared to exporters and tech names, but if you believe the BOJ is on a gradual tightening path, the banks start to look more compelling. From a foreign exchange perspective, I don't think this has a material direct impact on the yen, but if it's part of a broader trend of foreign institutions accumulating Japanese equities, that could provide structural support for the currency over time.
Got it. So a sector-specific positive, with potential knock-on effects if foreign flows continue. Now shifting gears to geopolitics, we're seeing fresh headlines around U.S. military strikes on Iran, and that's raising concerns about oil supply disruptions. Bloomberg is covering what's at stake for oil markets as these tensions escalate. Why does this matter specifically for Japan?
Japan is extremely vulnerable to oil price shocks. Roughly 90% of Japan's oil consumption comes from imports, and a significant portion of that is sourced from the Middle East. So any disruption to supply or any sustained spike in crude prices hits Japan's import bill directly. That feeds into inflation expectations, it pressures corporate margins, especially for energy-intensive industries like utilities, transport, and manufacturing, and it can weigh on consumer sentiment. This is not a small risk for Japan. If crude moves materially higher and stays there, it becomes a drag on the entire economy.
And what's the market implication when Tokyo reopens? How should investors position around this?
On equities, I'd expect near-term pressure on energy-dependent sectors. Trading companies, utilities, and transport names are obvious candidates for underperformance if oil spikes. On the flip side, some Japanese companies with exposure to energy or rare earth materials might see a modest lift, but that's a secondary effect. The bigger picture is that higher oil prices create a headwind for cyclicals and exporters. For the yen, geopolitical risk like this usually triggers safe haven demand, so I'd expect JPY to strengthen. That's consistent with the risk-off theme we were talking about earlier. And on JGBs, you typically see downward pressure on yields as investors seek safety. However, if oil prices stay elevated and inflation expectations rise, you could see longer duration yields start to creep higher over time. That's a more medium-term dynamic, though.
So in the near term, it's a risk-off story with yen strength and lower yields, but over time higher oil could complicate the inflation picture. That's a useful framework. One thing to watch closely is whether crude breaks above the $80 to $85 per barrel range, right?
Exactly. That's the key threshold. If we see a sustained breach above that level, it starts to materially impact Japan's current account balance and corporate earnings forecasts. At that point, it's not just a market story, it's a macro story, and the BOJ would have to factor that into their policy calculus. So monitoring crude prices is critical for anyone with Japan exposure right now.
Understood. So to recap for our listeners, even though Tokyo was closed today, we have three major themes shaping the outlook for next week. First, the Nasdaq sell-off and Nvidia weakness signal ongoing caution around growth equities, which will likely pressure Japanese tech and exporters while supporting the yen and JGBs. Second, JPMorgan's purchase of MUFG shares reinforces confidence in Japanese financials and could provide modest index support. And third, escalating US-Iran tensions are putting oil in focus, which is a significant risk for Japan given its heavy reliance on energy imports.
That's a great summary. The common thread across all three is that we're in a more cautious, risk-aware environment. Defensives and safe havens are likely to outperform in the near term, and investors should be watching for how these dynamics evolve over the next few trading sessions. Volatility is elevated and positioning matters.
Absolutely. For those of you tracking Japan's markets, this is a critical moment to stay informed and flexible. If you found today's briefing useful, consider subscribing to TOITOI Japan Market Radio for daily updates. We'll be back on Monday with live market action and fresh analysis. Thanks for listening, and we'll see you next time.